But let's focus in on earnings then. And Emami managed to put out a pretty solid set of double-digit growth this quarter with volume surging on the back of festive sales. NH Bhansali is the CFO, Finance Strategy, Business Development, joining in right now on the show to talk a little bit more about the numbers. Good to have you on board, Mr. Bhansali. Taking a look at the earnings, we've seen that the winter being the peak season has certainly boosted sales for the company. Do you think that going forward, it's a phenomenon of perhaps a one-off and sales could temper off? And what kind of growth can we expect?
We have delivered a consistent growth quarter on quarter, the second quarter and the third quarter. So the growth is more consistent, and it's not only led by winter. The growth has come from all the brands. Though winter has played a major role, but all the brands have performed very well. And the growth has come from all the channels. In fact, the international business has also delivered a good growth of 26%. So growth from all, and we believe that this kind of growth would continue. In fact, we have on a cumulative level for the 9 months, the past decline in the first quarter of 26% has also been wiped out. And we are now at a positive growth of 2% for the cumulative 9 months. So we are very highly satisfied with the kind of performance, and we are hopeful that going forward also there will be a good growth.
Okay, fair enough. And, given that you have seen double-digit volume growth and that's continued for the second straight quarter, what can you expect when it comes to your volume growth going forward, particularly in light of the increase that we're seeing in raw material prices? Because a lot of corporates, Mr. Bhansali, that we've been interacting with are saying that this is posing quite a challenge to their overall volume growth. So how is this rise in input costs going to impact your volumes as well as your margins?
Yeah, we believe the volume growth, double-digit volume growth has to continue in the times to come as well. And the current trajectory is also looking good. And in terms of the margins, we believe while the raw material prices had been benign in all this time, now it has started looking up. But overall, that seems to be within the control, and there would not be a major impact in terms of the margin. Though we would be spending more on advertisement and promotions. But on an overall, the margins would still be very, very good.
Healthcare portfolio with immunity boosters, health hygiene continuing to do well. Do you still see headroom there?
Yeah, see, our healthcare portfolio for the quarter has grown by 38% and for the 9 months by also 39%. And it has many things. We have come out with many new innovative and immunity current relevant kind of products, and all are doing very well. In fact, we have also gone online with our own portal of Gandu Care, and the trajectory and the kind of the responses we are getting from the consumers is extremely well, and this is going to continue. The new way of life is different, and we are all poised to take the benefit of this emerging situation.
Okay, what about sanitizer demand? That seems to be cooling off somewhat. Some people or other companies reducing their investments there. What's your take on that?
Yeah, over periods, the way it had been in the first and second quarter, it is tapering off. But nevertheless, there is still a great consciousness, and it's not only about the sanitizers and the other products are the new launches. Few of the new launches, the growth may come on an overall from the new launches. The growth from sanitizers may taper down, but the other products kind of aloe vera gel and soaps, hand washes, these habits are going to continue. Even in terms of the immunity and health consciousness, the single herbs range, wash powder, immunity boosters, there are so many things in the stable, and they are going to fuel the growth for the future as well.
Mr. Bhansali, rural is recovering faster than urban, and it contributes to a good over 55% of your revenue. Has the strong demand continued in rural as well as tier 3 and 4 cities, and what segments are rural consumers really looking at?
Yeah, rural has also done well. it is not just urban. Urban rural has also done very well, and we have also taken many initiatives in terms of putting our right channel on the street. We are reworking on our sales force automations and also on routing and putting our products more on the rural channels on the right outlets. These are all paying well, and rural is growing very aggressively for us as well. In fact, as I said, the growth is coming from all. Maybe general trade has grown in double digits. Rural also has grown. In fact, e-commerce has grown by more than 2.5 times, and modern trade has also grown by over 50%.
Sure. Will the company then be looking to pass on, Mr. Bhansali, the increase that you are facing and witnessing in your raw material cost to the consumers? And if indeed we continue to see an escalation in raw material prices, to what extent are you willing to pass it on to consumers? Because there will only be that much absorption power, I'm guessing, before it starts impacting volumes.
We are very judicious in increasing the prices, and in fact, in the current quarter, we have delivered the highest ever EBITDA margins of over 36% for the quarter, despite the good investments behind the brands in terms of advertisement and promotion. So, we would not be very aggressive in terms of increasing the price, very judicious as we have done in the past, and there is, for the consumers, there would not be substantial impact in terms of the price increase.
Okay, thanks for joining us, Mr. Bhansali.